the big story right now, and I guess, we did have earnings with Best Buy and Dick's, but earnings season's mostly over, not too much to talk about, is Jackson Hole. It's just coming up, next 2 days. Powell's going to be speaking on Friday. They did make this virtual now, right? Because they're a danger zone, right? Yep. People are getting, COVID. Nobody's really, dying. Death rates are down tremendously. But if you're in a danger zone, whatever, and Wyoming's kind of like a friendly state when it comes to stuff like this. And listen, whatever it is, you want to keep people safe. But the bottom line is, talk about Jackson Hole. Yeah, Friday, Powell is going to talk again virtually. And, a lot of people are like, is he going to talk tapering? Is he going to taper? What's going to happen? I mean, what are your thoughts?
Yeah, we need to spend no more than 60 seconds on this, and I won't even take all that time. It's just going to be in the headlines, so be prepared for tapering talks. And just remember, my big takeaway from this is much to do about nothing, because tapering or cutting back is totally different from the headlines that are probably going to come across your computer screens and cell phones about, less loose monetary policy. Just because you have a little bit less doesn't mean that you're not having the ridiculous environment that we've been talking about, and you have been talking about even longer, Frank, of easy money. So it's not the end to anything. They're way behind the curve, and you should know that by listening to us. But that's the world we live in. So if there's any volatility, nothing is changing in the short term. This is all just fun headlines. So that's my takeaway.
And Jackson Hole, I mean, you got to go back to the Greenspan days when any major policy announcements, I mean, they use Jackson Hole. They really don't. It's usually, I think it's next month, September, where you'd hear a little bit more in their meeting. But they make a big deal about this and Jackson Hole and all this stuff. But they will talk about tapering. I think he has to, right? I mean, we're looking at GDP growing at 6%. We're looking at, again, it will slow to weather 3% next year. Earnings are up 15% to expected by the end of this year, which is record highs. So 15%. I mean, they're up tremendously, right? So we're seeing that bounce back. Employment rate is falling. Asset prices are surging. Everyone's raising prices. Inflation getting crazy now, right? We're seeing over 5% on the CPI. And just to put that in perspective, if you look at the Fed, and I found this is on Charles Schwab's website. This was really, really cool, man. I got to send this to you, Daniel. This is really cool. So they just have a chart of the expectations, and they talk about tapering and anything. I'm going to show it, if you're on our Curzio Research YouTube page. They change your real GDP. They have, the median estimates, and the change from 2021, 7% going down 3.3%. They expect 2.4% in 2023. But unemployment rate, 4.5% in 2021. They're expecting 2022, 3.8%, and then 3.5% in 2023. Inflation, they're expecting, and let's look at a core inflation at 2%. It says they expected 3% at the end of 2021. It's 5% now, and they're expecting to be 2% in 2022, 2023. That's going to be interesting. But just looking at this chart and the expectations, they just don't make sense, because there's no way you're going to get that unemployment rate down to 3.5% or even 3.8% without incentivizing the employee, without providing more stimulus. Because if you're going to taper, it's going to result in margins being squeezed, less borrowing. It's probably going to result in less hiring. So I think it's going to be very difficult if you're looking to raise rates, taper, and talk about all this stuff and try to get that unemployment rate low. Not only getting it to that level, it's going to be hard when you still have incentives for people to make more money when and that's a fact. That's still going on right now in a lot of states. So, when I look at this whole thing, there's a couple of things, really. I know we want to spend 5 minutes on this important.
I said a minute, Frank. We're way over my timeline. Historically low rates, we continue to have them. And why do they keep them, even though almost every metric is showing growth, that we're back and we're fine and we don't really have to worry about COVID as much as we did, right? Why? It's because we haven't seen the consequences of these policies. We haven't. It seems like you could do this and there's no consequences. We did it in 2008, 2009, 2010. Okay, we keep doing it. Okay, $120 billion in monthly bond purchases. We're starting to see a little bit of inflation. They're using the word taper, because if they don't say taper, or not taper, they transitory for inflation. If they don't say transitory, meaning, short term, then they kind of have to raise rates and no longer buy bonds. So, which they don't want to do. And 120 billion monthly bond purchases is going to extend this easily through 2022, because once they start reducing this, it's going to be by 5 billion, 10 billion here. Again, when they taper, even in the past, when they taper, it's done over a 6 to 8, 9 month period. It takes a long time. Maybe you raise rates a tiny bit, but still, credit's going to be dirt cheap. It's going to inflate every asset. But, Jackson Hole, guys, I will look at it as it's not really a big deal. And, they're going to make a big deal out of it. Let's see if they talk tapering. But we'll see. I just know that, looking at the Fed's balance sheet has grown tremendously. and continues to grow. I'm showing that on the chart right now. Okay, this is a Charles Schwab, just go into, Fed's balance sheet and said, this is a pretty good article that I found, which I like to share. They just go over, Fed's balance sheet composition 2013 compared to 2021, how 70% is treasuries now when it was only 60%, and 40% was mortgage-backed securities in December 2003 compared to 31% now. But it's just, the Fed's there for you. They have that protection. And, this whole Jackson Hole thing, I agree. It's not a big story. But when it comes to tapering, that's a big story that's going to happen in the future. But just know, like Daniel said, it's not like, hey, everything's going to raise interest rates tremendously, no longer buying bonds. It's a whole entire process. Usually when they start, you see rates rise a little bit. Historically, then they start going down. That's usually the process. So don't expect rates to skyrocket. I still expect assets to do well. I still expect stocks to go higher, and a lot of companies have pricing power, but we'll see going forward.